All right, we got Zack Shapiro in the house. Zack, thanks for being on today. You've come on a number of our spaces, and I'm always really impressed with how articulate and informed and how you're able to just, I don't know, you come in and you always drop some bombs. Typically, they're contradictions. I think that people sometimes speak a little too confidently on spaces, and you've been there many times, more than I can count, to kind of deflate the bubble. But before we get started, I typically like to ask the guests to give a quick background, right? Who are you? Who is Zack Shapiro? Why did you decide to dive into law? And then we can get into Bitcoin and crypto and all that good stuff.
Yeah, for sure. Happy to give a little bit of my background. So my name's Zack Shapiro. I run a law firm called Rains LLP, where we work with Bitcoin and crypto startups. I originally went to law school probably thinking I was going to do something very different. I was really into philosophy in college. I thought maybe I wanted to be a philosophy professor, do that in a law school. Or if I was going to practice, maybe I would do something like be a federal prosecutor. And I went to Yale Law. I came out of law school, did some clerkships for the federal courts here in New York, which was a fascinating, really great experience. Spent a year at a big law firm and realized that actually, I wanted to be in the tech world, that was sort of more interesting. The sort of traditional path wasn't for me. And I ended up sort of co-founding an e-commerce startup and falling in love specifically with startup law. I realized that like exactly where I wanted to be was in the tech world, but in a lawyer role rather than an operator role. I sort of got introduced to Bitcoin through the broader crypto space in around 2016. I was going to be a junior associate at a large law firm. That's notoriously not the most interesting job in the world. And so I was looking for an angle to be able to do some sort of more sophisticated work that would not normally be available to junior associates. A friend of mine was starting up a small crypto hedge fund at the time and asking what at that point were really interesting, novel legal questions around some of the securities law stuff that we often talk about in the space around, what would insider trading in Bitcoin even mean? And so I sort of raised my hand to be the crypto guy. And I got the timing right. I was there through the ICO boom. I got to work on some really cool stuff. And, I came out of that experience really interested in the technology of crypto, but not necessarily a believer in any particular asset or protocol. I was definitely buying at that point a lot into the sort of blockchain and not Bitcoin narrative, and that sort of Wall Street was parroting. In 2020, after so the startup I co-founded got acquired in like an acqui-hire situation, I didn't want to sort of keep going on that path. I wanted to start my own private practice focused on startups, and was still interested in crypto. And so I did a deep dive in 2020, having not paid attention for a couple of years, which, unfortunate for me, to see, all right, what's real here? What is the state of the art? And who do I think are sort of the smartest, most interesting people in the space? And I came away from that sort of second look with a really deep conviction about Bitcoin, that this is real. This has stood the test of time. The block size wars were an incredible proof point about Bitcoin actually being controlled by its community and resilient to very strong outside pressures to change, and that whatever else was true about crypto, Bitcoin is genuinely this transformative digital gold-like asset that could organize the way that humans interact with money. Also the sort of securities law questions I'd worked on in the ICO boom were still very much in full swing in 2020 as they are today, and so I figured there would be lots of interesting business there. So I started this firm that became Rains. Originally, it was with some e-commerce companies that I'd worked with at my startup. Very quickly, it pivoted into a crypto forward law firm. And I'd say at this point, 80% or so of my clients are in the digital asset space in some way, shape, or form.
What was it like to exit? What was it like to sell a company?
So this was like an acqui-hire exit. This was not like the awesome exit that you see some founders reach. The person who helped co-found my law firm had one of those sort of great M&A exits, and that seems incredibly exciting. What we had built was a e-commerce platform to share traffic and data. This was a bunch of e-commerce brands that came together. And, in like the 2015 to 2017 era, they were making a ton of money because their ratio of what a customer, the lifetime value of a customer that bought their product to how much it cost to acquire that customer was positive, which means you can scale the business sort of ad infinitum. At some point, the Facebook and Google algorithms got more efficient and made it much more expensive to acquire customers. And so you saw stores like Warby Parker and Casper Mattress open large physical retail stores because it was cheaper to get eyeballs off the street in expensive real estate than it was on Facebook. And so what we had tried to do is develop basically a digital department store where you can share traffic and data in order to get better unit economics and acquiring customers, but without having to give up your data to a company like Amazon that is a blocker for scaling at like a venture scale because you don't have good metrics to show your VCs. So we built some cool tech. The arbitrage that we were hoping for wasn't there. And so ended up getting acquired by a different company. And, that was a fascinating process, sort of seeing how the pieces we had built fit in elsewhere. But it was not like a, IPO or large M&A style exit.
Right. Okay. So, and you also said that you got involved with things in 2016 and 2017, but Bitcoin didn't really click for you until 2020. What was it about that time frame that made you recognize all the components, all the properties of Bitcoin that make it as great as it is?
Yeah, I think it was a couple of things. One was just the people I was talking to. In 2016, 2017, I was working at a large international law firm called Davis Polk. A lot of our clients were large hedge funds, large banks, large enterprise companies. And the way those people talk about Bitcoin and crypto is very different than the crypto native people who I met and talked to a lot starting in 2020. And frankly, I just think that the way crypto native people think about crypto is more sophisticated and, in some sense more accurate than folks inside large companies who sort of have a vague sense of what the buzzwords are and what crypto might be good for, but they're not sort of in the trenches in the way that the crypto focused people are. So I had sort of better access to the people who really knew what they were talking about and were true believers, and that was helpful. The block size wars having happened in the intervening years, I think was a powerful proof point, right? The user activated soft fork, the proof that unlike, the sort of founding story of Ethereum where you have the DAO hack and you have, a small number of people being able to gather consensus to roll back the chain, when you had all of the big players in Bitcoin, the exchanges, the miners, the VCs, sort of all in favor of what all things considered was a pretty modest change to the block size, and the decentralized community was able to overrule them. That is, I think, the strongest empirical proof point we have now that, for example, Bitcoin's supply cap of 21 million is not changeable, right? Gathering a coalition to change something that fundamental seems impossible in light of how hard it was to even expand the block size. So that was a helpful proof point. And then I think I just, thought about it in a different way. It was 2020, everyone was sort of locked at home. And I think I was maybe just open to the aha moment that so many of us have had with Bitcoin in a way that, as a practicing lawyer who was looking at this from an intellectual perspective, but not, forced to stare at it as deeply as I later was, I didn't quite get there.
Mm-hmm. Yeah, the block size wars are interesting. I never thought that I'd see Bitcoin Cash and all these other Bitcoin forks come close to flipping Bitcoin, and I'm glad that didn't happen. Do you know what it was about the block size wars in your mind, apart from this idea that the centralized community is going to override a few powerful actors? Apart from that, what else was it about the block size wars that really solidified that Bitcoin is the way to go, especially when you had guys like Roger Ver who are Bitcoin OGs coming out and supporting things like Bitcoin Cash?
Yeah, I mean, the block size wars were really deeply about what is Bitcoin, what is it meant for? And even in 2017, the narrative around Bitcoin was really a lot about Bitcoin as a medium of exchange. When I talk about, I worked on a project to think through, all right, what conceptually would insider trading in Bitcoin mean? One of the examples we came up with is, you're working at Amazon, you understand that Amazon in the future is about to start accepting Bitcoin for payments, the price is going to go up, and so that could be a basis for insider trading. I think that was a good hint that the most bullish thing for most people talking about Bitcoin in 2017 is really adoption in e-commerce. Since then, we've had proliferation of ACH. There are all sorts of ways that online payments have become easier. And that's not really the problem that we most need Bitcoin to solve. It's, money debasement, right? And 2020 was another incredible proof point. Bitcoin can serve as this incredible store of value that's immune to debasement by the government, that it has this fixed supply cap. And if you were to think about, all right, the block size wars, there was a faction in Bitcoin, a very powerful faction, for those who don't know the story, that wanted to change the way Bitcoin worked to have larger block sizes, sort of more data you could include in each block on the blockchain that would make transactions cheaper, and faster to add your transactions to the blockchain. And so on the margin, this would be good if you're using Bitcoin for payments. That seems like an obviously good thing. Why wouldn't you do that? The reason you wouldn't do that is because if you increase the block size and you have more data per block, it becomes more computationally expensive to run a Bitcoin validator node, right? There are lots of people all over the world, tens, I think it might even be hundreds of thousands of people who run nodes to verify Bitcoin transactions. And you can do that on a really inexpensive piece of hardware. On a Raspberry Pi, you can build it at home. It's super easy. The barrier of entry is really low. And if you were to increase the block size enough, you would make that harder to validate and harder to have the software that you need to verify Bitcoin transactions. And therefore, in theory, you're taking one step towards centralization and one step towards there is a group of people who can fundamentally change things about Bitcoin, including the supply cap, which is what makes Bitcoin valuable as money, as a store of value. And when Bitcoin as a payments tool squared off against Bitcoin as an asset, the fact that the community came together and supported Bitcoin as an asset and drew a line in the sand, like I said, it validated the power of the community and the decentralization of Bitcoin, but it also sort of changed the narrative for Bitcoin from primarily being about payments to primarily about being a store of value and a hedge against monetary debasement. And right in time for the huge need for that in 2020 when the government printed a tremendous amount of money in the wake of COVID.
Yeah, I think doubling the M2 money supply, if I'm not mistaken.
Mm-hmm.
Would you consider yourself a Bitcoin maxi?
I don't know. Here's what I'd say. If I look at the entire digital asset space, I think the things that meaningfully have product market fit now are Bitcoin and maybe stablecoins. I say maybe with stablecoins because there could be regulatory changes that make issuing stablecoins and using stablecoins much more difficult. I think Bitcoin is here to stay as a form of money. As sort of sound money, I don't think Bitcoin has any competitors. The block size war, I think, is over. I don't think Ethereum is a competitor to Bitcoin as money. It might, be good for other things, but it's not better money than Bitcoin. BSV, is more or less a fraud. Bitcoin Cash didn't work. And so, in terms of like crypto as a base money asset, I think Bitcoin is the only reasonable contender at this point. Now, might there be other things that we can do in crypto that will have product market fit in the future, like decentralized finance that works better than centralized finance, or organizations that instead of being organized as a Delaware C corp are organized as a DAO, and anyone can permissionlessly participate across the world. Those would be very cool, and I am open-minded to those things working out. And I'm working with a lot of great projects that are trying to build the infrastructure for those types of Web3 projects. And I unlike sort of the quote unquote toxic Bitcoin maximalists, I don't think those are evil. I don't think issuing a token is evil. I don't think a lot of the tokens that exist today are great investments. But I'm open to the concept of crypto. I just think that like most things other than Bitcoin at this point, if I'm being honest, are just an experiment. And so as an investor, I'm pretty much a Bitcoin maximalist. I do some private market VC investments in crypto where I see a good opportunity. But in terms of liquid tokens, for me, it's really pretty much just Bitcoin. But ideologically, I don't have anything else against creating some other crypto project than Bitcoin. I would just be skeptical as to whether it's going to work.
Yeah, I'd make the argument, and I've done so in the past, that DeFi is the only sector of crypto that's found product market fit. You say that you think it's only Bitcoin and only stable coins. Do you think Ethereum has to some degree found product market fit?
Well, it's
because of DeFi, because of stable coins?
Yeah, I mean, stable coins are on lots of different networks, right? Tron is very popular for stable coins. Yeah. Solana is becoming increasingly popular for stable coins. I think one day Lightning is likely to be very popular for stable coins because you're just not going to have the fees issue associated with a native token. But, it depends, product market fit for what? So Ethereum is clearly very popular. It has a high market cap. It has an ETF now, and lots of people use it. But the thing they use it for is mostly to speculate on other tokens. And that's not something that I think I would really count as product market fit in crypto, unless you want to say like crypto at large has product market fit as a 24/7 global casino. Then I definitely agree with you. And I think, for that reason, things like meme coins are likely here to stay because people love gambling. But are they solving some real world problem other than speculation? I think Bitcoin and stablecoins specifically, Bitcoin is a hedge against all sort of fiat debasement, and stablecoins as a hedge against local fiat debasement in countries that have sort of worse fiat money than the dollar. Those are solving real world problems that existed, and they are just a better solution. Bitcoin is better than gold at what gold is supposed to do. At this point, like if I work with international clients, I would rather receive USDC than an international wire. It's just faster and cheaper and better. And so to me, that's product market fit. Like, the alternative in the fiat system is just worse. I don't think that's true of DeFi broadly. Like, there's a lot of really cool stuff in DeFi. I think the concept of an automated market maker and using just math and cryptography to make a market is amazing. I think some of the stuff that's being built with smart contract and DEX is really super cool, but you're not going to find anyone who I think can argue with a straight face that at this point it functions better than the legacy system. If it does, like, that is a game changer. I'm totally open to that. And same with DAOs, right? I think of the crypto technologies other than Bitcoin, I'm most interested in, it's DAOs by far. Being able to have people come together to pool capital and get things done around the world without having to rely on the courts and the monopoly of violence by the state, I think is a really powerful project, and I hope will be successful one day. But it's hard to look at any extant DAOs and be like, oh yeah, this works better than a Delaware C Corp. Like they're all in their own ways like small governance dumpster fires.
So let me ask this. I guess I'll push back a little bit. When it comes to lending markets, for example, like Aave, and when it comes to automated market makers, and when it comes to decentralized exchanges, sure, a lot of the stuff that is being traded on a DEX is speculative and they're shit coins. But wouldn't you say that a decentralized exchange or a lending protocol like Aave, it might not be as efficient as traditional financial tools, but the fact that it democratizes them and gives everyday people like me access to them without having to go through third party. So, for example, let's say that I have Bitcoin and I have been saving it for 6-7 years, and I want to be able to collateralize it so I don't have to sell it and take capital gains. Aave now lets me do that. I know that you can get into the arguments about why it's risky and why wrap Bitcoin's not real Bitcoin and all that stuff, but isn't this providing folks like me a solution or an alternative to, well, an option to collateralize my Bitcoin, borrow against it?
Yeah, I mean, this might be dodging your question a little bit, but I think within a couple of years, by far the most efficient way is going to do that is to be borrow against ETF shares. And if what you're trying to do is have Bitcoin exposure and borrow against it using large brokerages, large traditional lenders, that's just necessarily going to be more efficient for the time being until we have a really robust and deep and liquid DeFi ecosystem. And regulation is going to be important there. But right now, if I was a large holder of Bitcoin and I wanted to get margin on that, I don't think I would go to a DEX. I think there are better options out there. But when the most efficient option is a DEX, I do think that's a game changer.
Well, maybe not efficiency, but access. So I'm a guy that wants a self-custody. I don't really want ETF exposure. What are options for folks like me and you? Or I'm not going to assume you, but folks like me and people around me that don't want to deal with ETFs, but want the option of using a lending protocol like Aave?
Yeah, well, I think a lot of the large centralized exchanges also give you some margin against your assets. It's different for some US customers. And certainly things like DEXs can be a workaround to strict regulatory environments. This is a challenge as someone who works with a lot of token issuers. What do you do about US people can use VPNs to get access to DEXs and trade assets that are supposed to exclude US persons? And so if what you're trying to solve for is you don't have access for some regulatory reason and DEXs are permissionless, I hear you. I think that's different than product market fit, or maybe it's a different kind of product market fit. But again, I don't know that people outside of crypto are going to adopt these until it is more efficient than the incumbent system, and probably more efficient by a lot, right? I mean, Bitcoin isn't just better than gold as a neutral monetary store of value. It's a lot better, right? It's like if you could email gold, that's amazing. That is a 10x, 100x, 1000x improvement. When we see that for DEXs over traditional brokerages or lenders, that will be a different story.
Yeah, fair enough. So on the topic of mass adoption or adoption in general, what do you think we need to see? What catalysts are important for driving mass adoption?
Yeah, so this is, I think, one of my pessimistic takes that you were referencing at the outset. I think we need to see different tokenomics for new projects. I think, in order to get mass adoption, the thing that you really need is some killer app that has product market fit and is more efficient than whatever it's replacing, right? Crypto is the best answer to do X, right? And the example of stablecoins is if you're trying to move money internationally and you know how to open up a Coinbase account, stablecoins are just better than international wires now. When we have an app that does anything meaningfully better using crypto than the incumbent tool, that will be, I think, the powerful driver of adoption. So the question is, why haven't we seen that? Because there have been tens of billions of dollars of venture capital invested across the space. There's huge name recognition for crypto. We had all the 2021 Super Bowl ads. Everyone knows what crypto is at this point. why is it that there aren't basically any applications that work well and that are better than the incumbent? And I think the answer there is the just hugely perverse incentives around printing tokens. And this is where I do have a little bit of sympathy for sort of the toxic Bitcoin maxi folks, is not that you can't print a token and have it be successful, but if you can print a token and your VCs are like, we'll fund your token, but like we need a third of it. And by the way, you should take a third of it. And, whether or not your product works, you can be wealthy enough that you don't need to work again. I think that's a really hard thing for founders to say no to. And I think in this cycle in particular, we're seeing so much of the sort of price appreciation happen in the private markets where, VCs and private investors are bidding up tokens before they go live, where, once you actually launch the token and it's live to the public, you've got massive unrealized gains on the part of the team, on the part of early stage VCs. And then just every time those private token allocations unlock, you've basically, assign the token to down only mode for the foreseeable future. And then when you're going to retail folks and you're saying, listen, we built this app, it's really cool. We're going to monetize your healthcare data. We're going to monetize this and that on the blockchain. But in order to access this product, you have to buy this token that's in down only mode and you have to learn how to use a DEX. That's a really big ask. And so, I think this is one of those things where like you learn by touching the hot stove. And so probably the answer here is we have one or two more cycles of people, buying into hype, getting burned. And then the current paradigm for venture fundraising for tokens goes away because people aren't like just exit opportunities aren't there. There's no one who's going to buy these bags. And I think that might change the incentives for building where people really focus on adoption rather than can I make this token worth a lot of money and make myself and my investors wealthy.
I made this argument earlier in the year. I said we're not in a bull market, and the metrics I pointed at were number of searches for crypto-related terms, views on popular YouTube channels, inflows of new retail investors and decentralized exchanges, and a few other metrics. And I think we all kind of saw that the last half year, we've kind of been cooking ourselves. Do you think we'll get another bull market like we had in 2021?
Look, I'm very bad at predicting the future. I think it's certainly possible. A lot of these bull runs are narrative driven. I think you could have a set of circumstances line up where interest rates are being cut, there's being liquidity injected into the system. A narrative around crypto and AI takes off, like, oh, this is the money that AI is going to use, and retail folks get really interested. And then you have a piling in, or maybe not even retail folks, right? You have institution driven FOMO cycles. And then all of that price action is driven on narrative, and you have a blow off top, and then the tech is vaporware, and then you have a big crash. Like I think that absolutely could happen again. Maybe it will, maybe it won't, but that seems plausible to me. And I think each time you end up sort of turning off a certain number of people when they get burned in that way. I think that's the reason we're not seeing these like retail sort of Google search metrics that we saw in 2021, is that like people kind of know what crypto is. They kind of feel like it's a scam. They felt vindicated when they saw crypto go up, and then FTX happened and all the assets cratered, and they're probably kind of confused about why it's up right now, but many of them are not back because of the experience they had. I think there's a lot of sort of VC capital that hasn't been deployed yet that needs to be deployed. And so, investors and teams are going to do their best to make projects seem attractive. But the question is like how many more times that will work. And when that stops working, there will stop being capital deployed towards that, and there will be different incentives. And I think the silver lining of like there are a limited number of times this can play out again is once you're not able to just print a token and make life-changing money, there are lots of passionate and talented builders in the space who then might focus on, okay, forget the token side of things. How do we build something that like is incredible and is so much better than what exists out there? Because I think there are those applications for crypto. It's just very hard to get past the token number go up stuff to get to the use cases.
Well, Zach, the opposite's happening, right? It's becoming easier than ever to churn up your own token. And we've seen that with sites like pump.fun. So I begged this question to you, and it was one that we covered last week. I was on Leap's space. Are dApps or apps or whatever you want to call pump.fun, is something like pump.fun a net positive or a net negative? Because the way that I see it, and to piggyback off your point earlier, a lot of people that get into crypto for the first time end up buying these sorts of bags. They get rich. they got wrecked. They conflate crypto with scams, sometimes Bitcoin with scams, and they don't ever come back. So I would love to know your thoughts on that.
Yeah, so I guess the question is net positive for what? In terms of like the adoption of crypto
Industry growth.
as a tool, I kind of think it's all good. The way crypto works is it's permissionless, and that creates a incredibly competitive, brutal Darwinian system where people are going to try lots of things, and most of them are going to fail. And the things that work are like really battle hardened, and that's how you build amazing, resilient, censorship resistant stuff like Bitcoin. And so I say, the more apps, the better. Let's try all the different technology. You never know what's going to come out of that that's going to be useful. Now, for token prices, I think things like pump.fun that make it trivially easy to launch a meme coin are dilutive to the price of meme coins, right? That, meme coins are, they're a gambling vehicle. They're part of the attention economy. And the lower the barrier of entry is to creating meme coins, the more meme coins there will be. And therefore the less valuable any one meme coin is going to be. And I don't think that like currently trading meme coins is so seamless, outside of like Robinhood, that lots of people are going to rush to do that. So probably bearish for meme coin prices over the long term, not to say that they'll go away, but like the easier it is for people to create a meme coin, the more competitive the environment is for a meme coin to do well. But in terms of like, moving the crypto industry forward, yeah, I don't think there's any app that someone's going to create that's going to be hugely harmful. The more tech that's built, the better. The token associated with it might not do well.
Right. So what about front-end UI? Front-end UI is kind of trash. It's still kind of trash. I think that Rabby Wallet is a good example of a team that's trying to make strides on that end. But if we in the next year or two get seamless, sleek front-end UI where you can, for example, do a cross-chain token swap from Base to Solana and then back to another EVM layer 2 like Arbitrum in a click of a button. Do you think that would probably stimulate some interest and have people flooding in again? Because like you just said, we don't have a...
No, I mean, look, front-end UI is super important. If we're going to get mass adoption, I think that's a necessary component. And the industry has been talking about for a long time, is you don't even know you're using crypto, right? That's the ideal front-end UI. It's better plumbing on the back end. We haven't seen many great examples of that yet. But the specific example you're giving, like, I don't think there is a huge hunger among the general population to do cross-chain bridges to Base and Arbitrum and what, like, that's not a thing that normal people think about.
Gambling.
Yeah, but gambling on what? So like, one app that's done very well is Polymarket, right? It's a pretty easy way to bet on markets. It leverages stable coins. That's great. Like if you provide people a seamless tool to gamble on stuff that they are interested in gambling on, right? So sports betting using crypto might be a great example. Sure, I could see that getting adoption. But like gambling on one obscure token versus another, I just like that's a really niche hobby that like you and I are surrounded by people that are interested in that. Right. I don't know that making that easier is going to create a huge amount of adoption.
It's a fair point. Do you think that the layer 1 and layer 2 wars are going to continue? Solana, Avalanche, Ethereum, Arbitrum, Metis. I mean, there's so many layer 2s at this point, yet alone alt layer 1s. So I would love to know what your thoughts are on who you think is going to be the victor if it's not a zero-sum game.
Yeah, I don't know if it's a zero-sum game. I think there's 2 layers of question for me. The first is like broadly, is Web3 real, right? Like is Web3 going to find product market fit in any of these areas we were talking about? And do we want to design the type of ownership economy that Web3 is about, where applications, properties, websites, IP, et cetera, is owned by users, and are regulations going to allow that? If the answer to that is yes, and like Web3 is going to succeed and be an important part of the internet and economic infrastructure, I think there is a broad debate between whether these networks should be monolithic or modular, right? And so a monolithic network is something where sort of everything happens in the same place and it's seamless. And the best example of that right now is Solana, which, the various trade-offs are, it's a bit more centralized than some of its competitors, but everything is kind of, seamless and cheap and fast on layer 1. And, it's a joy to use layer 1. It's really easy to move funds around. And that's why Solana has been so successful with meme coins compared to Ethereum, like it's so expensive and slow on Ethereum to do meme coins. And with Solana, it's not. That may or may not be the right kind of tool for a Web3 economy. The alternative would be a modular smaller network, right? And so instead of having it all in the same place, there are sort of purpose-built side chains, layer twos, et cetera, like small blockchains for specific applications. So there might be a, copyright registry blockchain where you mint an NFT of some intellectual property you own, and people can, pay a smart contract to get used to that. You might have another modular blockchain that is specific to real estate, right, where the deed to your house lives, and that helps with the title clearing process for buying a house. And that sort of view, I think, is best encapsulated by sort of like the Cosmos, Celestia type ecosystem, right, where it's all about data availability and purpose-built blockchains. And then Ethereum, between the sort of base layer and the layer twos, I think is somewhere in between those models. And so first, I'm a little bit agnostic as to whether Web3 is going to amount really to anything at all. But assuming it is, assuming that, these narratives come true at some point, I think there is that secondary question of like, is the best way to organize this in one monolithic system or in lots of modular systems that connect to each other? And I think this is going to be one of those Darwinian systems, like we're going to try both. And maybe there is room for both. Maybe it's not zero sum, or maybe one of those two will obviously be the right answer. I don't know. I mean, I think you could make a reasonable case for either.
It's such a, it's so you can't, if you had to pick one, you couldn't. You can make an argument.
And that's why I'm not invested in them. And I've talked to smart people who believe very strongly in one or the other. If I was a crypto fund, I would probably allocate some to both. But I think that these things are meaningful competitors to each other. It does not seem obvious which of the current incumbents or some future thing that's invented, which will be the best. Which is why, I just sleep best at night holding Bitcoin, where I don't see something else coming to be like a base money asset in the way Bitcoin is. But in terms of like the backbone of Web3, yeah, maybe it'll be Ethereum or one of the Ethereum L2s. Maybe it'll be Cosmos. Maybe it'll be I have no idea.
So with that said, Zach, what does your portfolio look like? Are you all Bitcoin?
Bitcoin and venture bets.
Bitcoin and venture bets. That's it.
That's it.
No equities, no real estate.
Oh, yeah. No, and I meant in crypto.
Okay. Outside of crypto.
Outside of crypto, it's boring traditional investments. It's index funds,
like?
It's T-bills, it's cash. Like I try and have a good barbell because the crypto stuff is so volatile that it makes me sleep well at night to have dry powder.
You're more pessimistic than I am, and I think that in my circles I'm pretty pessimistic about the near to midterm future of Web3. I'm in the camp that most of this stuff has not found product market fit, and it's wild speculation, and every project has a token and they don't need a token, and most of this stuff goes to zero because historically it has. I get booed off spaces sometimes, but that's what I genuinely believe. If you had to look at different sectors in the industry, what do you think is closest to finding product market fit and your definition of product market fit?
Yeah, that's a great question. I mean, I don't know. Like what I would say broadly about crypto and Web3 is that I think it's possible, but not inevitable, right? And which is the closest right now? I mean, none of them feel hugely close. I mean, there's like stablecoin legislation could change a lot of things. Getting some sort of market structure bill for how we deal with securitized tokens could make a big difference. And so just in terms of like, what is the fewest steps between here and product market fit for some sector in crypto, the cleanest path, I think, is for RWA, right? Like right now, I think a lot of the RWA stuff is vaporware and doesn't make a ton of sense, but specifically because of the way securities laws work, and that tokenizing a security, which is what RWA is, adds more complexity rather than removing complexity. That could change, right? If we had different laws about how tokenized securities would work, I think, and in a way that made big institutions like BlackRock feel good about tokenizing real estate, tokenizing equities, whatever, tokenizing IP, I could see that happening pretty fast because it's not so technically difficult to implement, how you would do tokenized securities. It's much more of a regulatory challenge. So if I had to guess which area, if you told me, all right, a year from now, there's going to be real product market fit, or 2 years from now, real product market fit for something in crypto other than stablecoins and Bitcoin, guess which one it is? I'd probably say RWA.
Okay. And so for the RWA narrative to play out, we would obviously, especially in the US, need some form of concrete regulation by rulemaking, not regulation by enforcement, which is what we've gotten over the last few years. What are your thoughts on the current state US regulations towards crypto assets?
I mean, this is not it's totally unworkable. There are two broad regulatory questions that face crypto. The first is the super famous one, which is which of these things are securities and which are not. And this is an existential question because there just isn't a good way to do securities on the blockchain. our securities law is not meant for that. And so, token issuers have to bend over backwards to try and make the argument that their token is not being offered as a security. And, I spend a ton of my time working with startups, and investors thinking about the Howey test and how do you design a token that's not a security under Howey. And, we just need new laws written that answer this question. A, where is the line between a security and not? And B, if the token is a security, how do we, have that security run on the blockchain in a compliant way? The other question, which I think is, my heart is really in recently, is different than the securities law question, is where is the line between a regulated financial institution, and the legal term here is a money service business or a money transmitter, and just code that's not regulated as a financial institution. And I think this is incredibly important for DEXs. This is incredibly important for privacy tools, for eCashments. There are a lot of projects out there which, in my view, properly understood, are operated on a peer-to-peer basis by their users. And they're not operated by some third-party intermediary company that would be regulated under the Bank Secrecy Act, would be regulated, as if it were the type of financial institution that has affirmative KYC AML obligations. Because really what is going on is you got person A, you got person B, and then you have code that they're both using to interact with each other directly on a peer-to-peer basis. That's another really difficult regulatory situation, right? We've had 11 years now of guidance from FinCEN, which is the primary US regulator. It's part of the Treasury Department that deals with this issue. Recently, there have been two high-profile criminal federal cases against the developers of Tornado Cash and Samurai Wallet that are challenging the understanding that most lawyers had of where the line is between pure code and a financial company. And that's something I would also love to see, really good concrete legislation that sets ground rules and really takes into account the difference between a company that's accepting funds from people and transmitting them and is, does need to be regulated, and then just code that's being used on a peer-to-peer basis where there isn't really anyone to regulate, and where trying to make the developers of that code criminally responsible for the way people use it is unfair, unconstitutional, and unworkable.
That was going to be my follow-up question. Your thoughts on developer deploying revocable contracts, decentralized application like Tornado Cash, and then that being used for illicit purposes and also for unillicit purposes. But you answered. I think it's crazy, and I don't know. Are these guys still in custody?
Oh, yes. There's an ongoing criminal case. One of them was already sentenced to quite a lot of prison time in the Netherlands. The U.S. case, we're waiting on a substantive ruling on the really important issue of were they running a money service business. The Samurai Wallet case is still ongoing. I'm involved in helping to fund the defense through the Bitcoin Policy Institute. And, we're going to write an amicus brief specifically on the question of did Samurai Wallet operate as a money service business. And defendants there are not in custody. They're on supervised release. But if they're convicted, that they face a large prison sentence. And the precedent in these cases is incredibly important. It's going to make it really hard to build non-custodial tools if these cases come out the wrong way. And I think it already has had a remarkable chilling effect in the industry. I've heard from a whole bunch of founders, who are worried about, can they continue to operate? Are they going to be arrested for creating a neutral tool where they have no intent that it be used for any nefarious purpose? But when you publish a tool on the internet, you can't always control what people do with it. And for the same reason that we don't, throw Apple executives in prison when people use a MacBook to commit crimes, I don't think we should throw developers in prison if people use their smart contracts or privacy protocols to commit crimes.
I'm trying to wrap my head around the other side of it. If you could put on a prosecutor's hat, where are they coming from? Because you just drew a perfect analogy between a decentralized application like Tornado Cash and an iPhone. In fact, I'd argue that with an iPhone, you could probably do something to revoke access or revoke access to a specific person being able to use X, Y, and Z functions. Whereas Tornado Cash is code, it's deployed, it's unrevocable. And that's just the nature of Ethereum. That's the nature of a decentralized layer one infrastructure that lets you build these sorts of apps on it.
Mm-hmm. Yeah, if I was Steel Manning the government's argument, I think I would say three things. So first, especially in the case of Tornado Cash, but in both Tornado Cash and Samurai, the government would want to and is arguing that the developers did more than just write the code. In the case of Tornado Cash, they held tokens, which could upgrade the smart contracts. They helped run centralized relayers, which facilitated the payment of ETH gas fees that would allow people to withdraw tokens from the smart contract. You could say that, the smart contract was in custody of funds in the way we think of money service business being custody. With Samurai Wallet, they'll point to the centralized coordinator for the coin join. So one is, the active participation of some of these developers in helping provide services. Now, my view is that actually the question here is about custody and was this the type of regulated business to begin with, but they will point to the services. So that's number one. Number two is if you're the government, you're probably like, hey, building a non-custodial crypto tool shouldn't be the thing that takes down, 50 years law we've had since the Bank Secrecy Act in 1970 meant to combat money laundering, right? Like this is a new technology and, we've had rules of the road for how, businesses that are capable of engaging or helping people with money laundering. And why should you get a pass just because you built something on a blockchain? Now, again, what my actual response to that is, the government can create laws to regulate certain activities, but they have to actually engage with what they're regulating and not pretend that something is a money service business when it is not, when it's just peer-to-peer. And if you want to write laws about, writing peer-to-peer code and try and have those pass muster under the First Amendment, you should do that. But anyway, and then the third, I think this is really more specific to Tornado Cash, is if you're the government, this is not just people evading, potentially sanctions laws, evading, AML requirements. It's people doing it in an immutable way. And what's remarkable about the Tornado Cash situation in particular is, okay, the developers were arrested, the website was seized, and it keeps running. And you probably heard of this famous incident after the actual Tornado Cash smart contract was designated by OFAC, which is the U.S. Sanctions Authority, as a primary money laundering concern, a sanctioned entity. There were people who were dusting famous people's ETH wallets with little bits of, I think it was USDC, that went through Tornado Cash, which technically is an OFAC violation, right? To show how absurd this is. And yes, that is absurd and maybe an argument why you shouldn't sanction a smart contract. But from the government's perspective, there's nothing they can do about it, right? These are immutable tools. And having this magic box that lives on the internet that allows for an unlimited amount of money laundering, and there's nothing the government can do about it, I think you can get into the mind space where that seems like a concern. And some of my frustration with folks in the crypto community is like, I think we need to take that concern seriously. Money laundering is bad, right? The fact that, the North Koreans seem to have used Tornado Cash to launder the biggest heist in history, $650 million from the Ronin Bridge hack, right? They hacked a video game and they stole hundreds of millions of dollars and maybe use some of that to fund their missile program. Like, we shouldn't be happy about that, right? We should have ways of stopping that, of actually disrupting countries from doing bad things and bad actors and people doing child porn and drug distribution on the internet. Like, those are all really bad and we should want to stop them. We just need laws that respect people's privacy and that treat the technology that's being regulated for what it is, right? And that are built for those technologies. The real issue I have with those cases is the way they are trying to stretch the law in a way that it doesn't make sense to fit tools that they would like to regulate by treating them as if they were a different kind of tool that they're not.
Right. And let me ask you this, the government, with all the money they have, all the resources they have, all the minds they have, are they just playing ignorant, or do they just not have the right people around them to advise the decision makers on what this technology is and how it works and why applying an old paintbrush to this new paradigm just doesn't make sense? And it's unfair to a founder that is now being thrown in prison for, like you said, seems to be a substantial amount of time.
Yeah, so I'm just speculating here, and I think it also depends on which part of the government you're talking about. So one attempt to paint these things all with that broad brush and treat almost everyone in the crypto space as a money service business in a way that is probably not possible to comply with in a lot of cases is the DAMLA bill by Elizabeth Warren. I think Elizabeth Warren understands perfectly how these regulations would work and how they would be an effective ban on this technology, and I think that's on purpose.
Why?
For whatever reason, Elizabeth Warren seems to hate the cryptocurrency industry. I'd have to speculate as to why. But I think there are a lot of folks out there who think that there really just shouldn't be things that are out of the federal government's control, right? That like the federal government are the representatives of the people. They need to pass laws that are respected and enforced. And anything that doesn't end run around that is, undesirable, undemocratic, evil, et cetera. And this is a way, without saying we are banning crypto, to effectively ban crypto in everything but like you can hold Bitcoin in an ATM. And so in her case, I think this is an intentional like actual attack on crypto. In terms of the DOJ prosecutions of Samurai Wallet and Tornado Cash, I don't think that's what's going on in those cases. I think it is some combination of the federal prosecutors, especially in the Southern District of New York. They have a mandate to combat money laundering using crypto. Money laundering using crypto is absolutely a real thing, right? In the Tornado Cash example, on a massive scale. And they want to use whatever tools in the toolkit they can to win these cases. And so they're taking a broad theory. I'm not sure the extent to which the prosecutors understand granularly how the technology works. I'm not sure how much that matters. I think this is just a case of we're going to make the broadest, most helpful to us legal argument, and they're not overly concerned about collateral damage in the crypto industry, right? It's something that you and I care a lot about. If you're a federal prosecutor and you've never worked in tech and you don't own any crypto and you don't care about crypto, that just might not be your greatest concern. And so I think there it's really just like the incentive is to win these cases and have a very powerful legal tool to go after perceived money laundering, rather than sort of in the prosecutor's case, a malicious attack trying to ban crypto.
I think we can both agree that the United States is heading in the wrong direction as it pertains to crypto regulation. Do you think that a regime change this November would help us do a 180? I know I read your tweets, and I know that you don't believe that crypto should be partisan or bipartisan, right? I know Democrats that support crypto. I know Republicans that support crypto. It shouldn't be a point of political contention, but it does kind of feel that way going into this specific election. And I don't think most people are going to peel back the layers to recognize that this is kind of a new paradigm versus old paradigm battle versus one that is political. So, and maybe you disagree, but again, do you think a regime change is going to help? And if so, why? And if Kamala and the Democrats win, do you think we'll continue to head down the same path, or do you think they will also try to make some reforms and changes?
Yeah, I think it would be, so I want to reiterate, I think crypto should be a bipartisan issue. And specifically, I think there are a lot of progressive reasons to support crypto. I think that the idea of this technology is to democratize ownership of the economy on terms that are fair and equal to everyone, and that you can access from all over the world. And that fits with a lot of the sort of left-leaning ideals I grew up with. And so conceptually, there should be no reason why it's a partisan issue, but it is, right? That's the way it's been playing out, and it would be naive not to recognize that. And the Trump campaign has been a lot more friendly to crypto than the Harris campaign so far. And, the Trump family is doing a DeFi token launch, it seems like, and Trump has NFTs. And would the environment look different in a Trump administration? Probably yes. I think we're likely to see more movement on that sort of securities law question, right? The Howey test, which tokens are securities. I don't know if the Trump administration would be as friendly on these sort of money service business sovereign use of crypto question. I think there's bipartisan opposition to permissionless finance. So yes, to some extent, I think Trump winning probably would be bullish for token prices. Would a Harris administration be a continuation of the Biden administration? I think we don't know yet. There are some signs that the people she has around her are the sort of Elizabeth Warren camp, and that's really disappointing. And I hope that is not a sign that it will be more of the same, because that would be horrible for our industry. On the other hand, she did the crypto for Harris thing. She's at least signaling vaguely that she'll be more responsive to the crypto industry's concerns. So I hope it will not be a continuation, is I guess how I put it.
Who do you think wins?
I think at this point, Harris is more likely to win.
Okay.
Not by a huge amount. But
why do you say that?
I think the shift in polling, indicates real change in momentum. I think a lot of Trump's sort of perceived lead was really about people's dissatisfaction with Joe Biden and a feeling that he just wasn't up to the task. And I think, Harris will be able to win back a lot of those voters who are really more anti-Biden voters than pro-Trump.
That's fair. I actually skipped over this question. I'm curious to know what you think. Most attorneys I speak to make the argument that the majority of crypto assets right now, if you were to go on CoinMarketCap or CoinGecko, are securities. So I'll ask the question in a different way. Which major crypto assets, do you believe are not securities?
Sure. Bitcoin, definitely not a security. At this point, Ethereum, definitely not a security. The SEC has basically admitted that. We're getting into speculation. I think at least several meme coins are not securities. The question is, like, if you're buying a meme coin, what is it you're sort of betting on? And if it's just serving as a collectible or a gambling game, I don't think that meets the definition of a securities offering under the Howey test, where that really asks, are you betting on the efforts of a particular people, like betting on a startup? And then, probably some subset of utility tokens are better thought of as commodities, right? If people are buying them genuinely to use them to get access to some protocol or tool. It's hard to say which, and the case law is really difficult here. There was 2 years ago, the library case where, there was a utility token that had real utility, and a court still found that it met the definition of a securities offering under Howey. So it's difficult. I think most tokens are probably securities, but meme coins and things with significant utility probably have the best argument.
That's fair. Zack, we're at the top of the hour, and I want to be mindful of your time. I would love to do this again in the future. Again, we love having you on the spaces. I think you bring a great take on a wide array of subjects. Any closing thoughts before we head out today?
No, thanks for having me. This is always really fun. I know I always sound pessimistic, and that's sort of the role I play. But I really, my pessimism is about the dislocation between token prices and hype and what's actually there. It doesn't mean that I'm pessimistic about the end goal or the outcome. And so, let me say, I'm a very strong believer in the long-term price of Bitcoin. I think that it should be worth at least some small multiple of gold. So I wouldn't be surprised to see it at some point over $1 million a coin. I'm a very strong long-term bull, and it would probably take a lot to change that. And, I think a lot of the technology that's being built around DAOs and DeFi are amazing. And I love being involved, and I hope to see it work. And I think there's a meaningful chance that it does. And if either of those verticals work and find real product market fit, I think that's an incredible game changer and great for society. And I think there's a real chance of that happening. I just don't think it's there yet. And so that makes it hard to bet on any particular token.
Amen, Zack. I couldn't agree more, and I couldn't have said any of that better myself. Thank you again for joining.
My pleasure. Thanks so much for having me.